Okay, rental income in hold on ya. Sharing. Okay, can you see the slide, the PDF rental income?
Yes, madam.
Alright. So rental income, alright, I have textbook kat depan I juga. Alright, is defined. Alright, now we have rental income section 4 apa? 4C or 4D? 4A, 4B, 4C, 4D? Ha.
D.
Body.
4D, right, later we see that rental income could be under section. It could be 4D. It could also be 4A. Mark. Right, later we see that rental income, alright, it could be 4D, it could also be 4A depending on the circumstances. Okay, let's see here. Tak nak warna hijau, nak warna oranye. Okay, rental is defined to include any sum paid for the use or occupation of any premises or part thereof for the hiring of anything. So hire also get rental. So it means that you're looking at premises means that rental income for the renting of properties. Or you can also have rental income because you give hire, right? It could be movable or it could be immovable properties. So properties here, right? In Malaysia, rental income can be derived from the following sources. So, letting out of land, commercial buildings or residential properties such as terrace house, flats and condominiums. Or you can also receive your rental income from letting out ships, plant, machine or motor vehicle. So normally, right, we only see rental income from properties only. But for income tax purpose, rental will also fall from the hiring or the letting of your ships. So for example, I have a company and the business, the company is renting out ships, the vessels, right? Because normally those operators of the transportation, the vessel, they don't actually buy the vessel. They actually hire the vessel from another company that have all these uh, uh, apa kata, vehicles lah, yeah. And you can also have a business where you actually give rental of plant or machinery, yeah. So for that, what we receive is a rental income. Okay, so remember that the rental income is not only from properties, but it's not only from the premises, but also came from plant and machinery as well, or even for motor vehicles. Yeah, remember that company, normally what you do is that, okay, I go for lease rental, right? So the lease rental, the lessor is actually receiving this rental, so that is a rental income under Income Tax Act. Okay, so rental is accessible under section 4D. Agreed, right? If it is an investment income. What do you mean by investment income? It means that you put the money there and then you stay and then the money comes in, right? It's a passive income. Whether rental is section 4A or 4D. So later we see that, oh, can it be a 4D or is it a 4A? It would be a question of fact, and Lord Diplock explained in American Leaf Blending that, so it is clear that rental, despite that the fact they are referred to para D, may nevertheless constitute income from a source of business if they are receivable in the course of carrying on business. So if your business is renting out properties, if the business is renting out of ships, right? So then the rental income becomes a business income. Yeah, because you are actually in the business of renting out. So the income that you receive is a section 4A income. But if you only have a property that you only, okay lah, letting out properties, not as a business, yeah. So then the income will be assessed under section 4D. Therefore, rent can also be assessed under section 4A. So that's why from the very beginning I said that rental income, it could be 4D and 4A. So public ruling 12. So very important here. We have public ruling from Z. Public ruling 12 2018. All right. Various circumstances under which rental income to be treated as a business income. So you have to look at the scenario given. Then you have to decide whether the income is section 4A or section 4D. In the exam question, we can give you both, where we have income, rental income under section 4D. We also have rental income under section 4A. Alright, so it applies to all taxpayers. So whether it's an individual or a company, right, you are going to have a rental income, which is, it could be assessed under 4A, it could be under section 4D. So when you say public ruling 12 2018, it says that, all right, rental income will be assessed under section 4A provided. So this is the key. Alright, for you to have your rental income to be assessed in section 4A, alright, means that you have to provide maintenance service or support service comprehensively and actively provided in relation to the real property. Kalau you're talking about real property, it means that here refers to premises, right? Premises only. So we are not referring to your leasing of rental of the plant and machinery, rental of what else? Tadi kita nampak ship ke apa? No, it's for real property. It means that only for premises. So we're talking about letting of your terrace houses or commercial properties, all this lah. Right. So what is a maintenance service or support service here? The maintenance support service must be provided by the owner. Right. So later you see that it has to be owner, siapa ni? Owner of the premises lah. Or through engagement of others. So you can have other people to, we call it as a, normally we call it as a caretaker. Right. Or others to do it. So mean that maintenance service here, alright, has to be provided by the owner. So that's why it cannot be passively derived from ownership. Alright, so that's why we say that if you are staying in a condominium, you see that the condominium do have that JMV, right? Means that the condominium management provides the maintenance services or support services to the kita panggil owners or to the people who live in the condominium lah, right? You see that, for example, if you're living in a condominium, because I used to be in condominium, all right, all the parking, all right, the cleanliness, the mopping of all the floors is actually being done by the condominium management, right? So it's not actually provided by the owner. So in that case, if you're looking about condominium, if you have a property and you have a rental income and the property is a condominium, it will never become section 4A. Alright, whenever you have property in condominium rented out, so the rental will always be under section 4D. Right, you cannot have it under section 4A because why? Because the maintenance services are not actually provided by the owner, but actually provided by the management of the condominium. But you're talking about terrace houses, you're talking about commercial properties. Yes, if you have this maintenance support service comprehensively actively provided, then it's assessed under section 4A income. So what's the difference between 4D and 4A? Alright, similarly, alright, 4A and 4D, if you have any expenditure incurred in deriving to that income, you can deduct the expenditure. But under section 4A, you do have capital allowances. So if you have incurred capital expenditure, for example, you put in air condition, alright, you have some office, some furnitures, you do have put in some kitchen appliances. So all this you can claim capital allowance. So under section 4A, gross income from rental minus all the expenditure, you get to your adjusted income. Adjusted income minus capital allowance, then you will have your statutory income from your rental. Right. So again, if I were to write it down here, you have your gross income, right, minus your less allowable expenses. Then you have your adjusted income. Then you less your capital allowance. Right, from there you get your statutory income. Okay. So this is section 4A. Right, section 4A. Not AB, AG. Right, business income. Right, so business income. So what's the difference between your section 4D? So if section 4A, alright, assuming that you have gross income minus allowable expenses, it will happen that you have adjusted loss. So whenever you have adjusted loss from section 4A, remember the adjusted loss can be used to be set off against your aggregate income. Yeah, so that's very important. So you're talking about adjusted loss, and then you have capital allowance. So it means that if you have a capital adjusted loss, your adjusted income is nil. So capital allowance will not be utilized. It will be carried forward to the following year to be set off against your future adjusted income. Right? So that's the good thing about 4A. And then if these losses, remember that if losses which is used to set off against your aggregate income, if the loss is not fully utilized, then you can carry forward to next year. Next year, it becomes loss brought forward to be set off against your aggregate statutory income. So that's the good thing about having income under section 4A, right? But if it's an income under section 4D, right, section 4D, what happens is that you can minus gross income less your allowable expense also, right? Then you have your adjusted rental income. Right, so this is under section 4D. So when you have rental income here, gross income minus allowable expenditure, then you have adjusted rental income. So then you have to add your other income. But if you have adjusted loss, right? If you happen to have adjusted loss, how do you get your adjusted loss? Means that your income is less than your expenses. So having adjusted loss, right, this one is a permanent loss. What is my permanent loss? It means that you cannot use the losses to set off against your aggregate income. Right? It's a permanent loss. You cannot use it to set off against your aggregate income. You cannot carry forward the losses to to next year. So it's a permanent loss. Right? So that's why, all right, for income tax planning, we always try to have your apa nama dia? Your rental income to be assessed under section 4A. So we try to make sure that you do actually have your comprehensive, the maintenance service or support service is provided comprehensively and actively. Alright, if you don't, then we advise the client to do this, right, so that it can be assessed under section 4A. Alright. Example here is that 942, we have Y tax number have 3 units of condominium, right, and let them out to 3 different person. So you know that because condominium, you cannot provide the comprehensive maintenance, right, the condominium. So because of that, you will assess under section 4D income, right. Section 4A, rental income assessed as a business source as one source. So this one very important, yeah. So if you have a rental income assessed as a business source, it's a one source. All rental income of the properties are aggregated and revenue expenses are deducted therefrom. Right. So what happens is that what it means is that if you have rental income from many properties, so under section 4A, it says that, all right, if you have property 1, property 2, property property 3, all right, so we are going to add all the income from all the properties. So that's why we call aggregated. So gross income from all properties minus expenditure from all the properties. So you only have one source, lah. So rather than you have property 1, property 2, property, you only have rental income, right? And that rental income, the income from all the properties minus expenses from all the properties, right? In order for the rental income to be assessed, it must be ready for occupation. Right? Even though you do have a property, but if it's not ready for occupation, right, you cannot be we cannot tax you yet. Right? Under section 4D, right, rental income would be assessed under 4D if the person let out the without, right, so without providing maintenance or support service actively and comprehensively. So when you assess that under section 4D, right, it says that this means that even if several real property are let out, they would be grouped as one. So similarly, if you have under section 4D, you have many properties, then we combine all income from all the properties minus all expenses from all the properties as one source rental income, right? All right, so how do you know the income is derived? Only if the rental income derived in Malaysia, is it that derivation is that the properties, the landed properties is in Malaysia. So if you have a rental income, you have property in Singapore and then you receive rental income, then whatever you receive is not taxable because it's not derived in Malaysia, right? So if it's an immovable property, right, it has to be situated in Malaysia. Immovable property, you're looking at houses lah, yeah. So if it's in Malaysia, then the income is derived in Malaysia, notwithstanding, it doesn't matter, right? The owner is outside Malaysia or the tenancy agreement is concluded outside Malaysia. It doesn't matter, disregarded. As long as the property is in Malaysia, if the owner is in London or the tenancy agreement is signed or concluded in London, alright, the income received by the owner will be taxed in Malaysia because why? It's derived in Malaysia based on the property is situated in Malaysia. But if you're talking about rental of a movable property, remember just now we have a motor vehicle, ada ship or ada plant machinery, right? Movable property normally involve the lease of plant and machinery. Right, the rental source will be depend on the place the property is used. So if it's used in Malaysia, alright, if it is used in Malaysia, then only the rental income is assessed or derived in Malaysia. A lessor carries on business in Malaysia. If the lessor carries on business in Malaysia, then the rental income accrued in Malaysia. Lessor carries on business outside Malaysia. For example, you have a lessor, foreign lessor. Then you have this withholding tax lah. That one later we do. Right? Is assessed. Okay, this one is important. Rental income is assessed on receipt basis. But it will be treated as gross income for the period when it first becomes receivable. Receipt refers to a situation where a person entitled to the rental income can obtain the receipt on demand. That is the date on which it is due and payable. So Sao Hin rents out a commercial building to Chi Kin. Annual rental due is 31st of December, but it's not paid until 14th of February. So you see that, right, you're supposed to receive 200,000 in 2019, but you only received that in 2020. The rental income will be assessed in the year YA 2019, even though you have not received, because why? It become receivable in 2019, right? When rent is due and payable, so even though you have not received it, all right, it would constitute received, right? So income tax will always do that there. All right, if income, you are going to tax you as soon as possible, even though you have not received it, all right, but it's become due and payable, we are going to tax you in that year, right? But expenses must be incurred, right? Then you have advance rental. Rental received in advance are accessible in the year of receipt. So for example, if I'm the landlord, right, I have a property and the tenant paid me in 2022, paid rental for 2022, 2023, 2024, right? So the rental is paid in advance. So when the rental is paid in advance, the law is that we are going to tax you in the year of receipt. Right? So even though it's for 2022, 23, 24, but receiving 2022, everything is actually taxed in the year 2022. Right? So the High Court held that rental here included the sum received by taxpayer had clearly been rent received in the year. So the whole 10 years income assessed in the year when it was received. So for example, the 3 years income rental will be assessed in the year 2022. So for tax planning, alright, would not be applicable. If the receipt is not rental, then it will not be applicable. So you have to make sure that it's common for the house owner to collect 1 month deposit as a security to reimburse the house owner for any damages to the property. So such deposit would not be taxed. When the deposit is used for the purpose of rental, then it will be assessed at the time. So what happens is that normally when you have a tenancy agreement, they will put it as a deposit. One is deposit, and then they put it as a, it's not an advance rental, they put as a deposit, 2 months deposit. Alright, so the 2 months deposit will not be taxed in the year that you receive, but later if the deposit is converted into a rental, then only be taxed in the year of conversion. Yeah. Okay. Remember, you have revenue minus expenses. So the expenses that you can claim against your rental income, whether it's for A or for D. You can claim expenses which is revenue expenditure wholly exclusively incurred in the production of rental income. Right, must be revenue. Means that if it's a capital expenditure, anything related to the fixed asset, right, then it's not deductible. Only revenue. So what are those? Cost of repairs and maintenance of the property, for example, plumbing, replacement of damaged doors, everything. Insurance premium on the fire, supervision and rental collection, obtaining tenant to replace, all right, the cost to get a replacement. The cost to get the first tenant is not, is an initial expenditure, so it's not deductible. But to get a replacement of the old tenant, then you can claim that as your expenditure. Interest expenditure paid on the loan, cost of renewing rental agreement and other miscellaneous expenses, quit rent and assessment, security service and repainting of the rented. So these are all the expenditure. I nak ambil gambar ni nak bagi kat kawan. Right, so if you have rental income, then you can claim all this expenditure, yeah. So when you claim a lot of expenditure, means that your income, your adjusted income will be lower, then you pay less tax. But the expenditure which is not allowed is expenses which is to obtain the first tenant, right? Because this expenditure is an initial expenditure, capital lah. Alright, such as if you incur expenditure to advertise, to get commission, to draw legal expenses, to draw the documents, alright, agreement. So all that is non-deductible because that is the first expenditure. Yeah, initial expenditure is always a capital. Temporary non-occupation. So for example, if that you have rented out the property and then the tenant move out, then there's a period of temporary non-occupation. Right, once the rental source exists, the expenses incurred during the non-occupation period would continue to be deductible. However, should the expenses exceed the gross income, the excess is a permanent loss. If it's a section 4D. Alright, but if investment source is not permitted under the Act to have current year. So you're talking about investment, which means that this one is section 4D, not 4A. Yeah, 4A is a business income. But if it's a 4A, if you have losses, then the losses can be deducted against your aggregate income. Yeah. So what happens is that if you say that there's a temporary non-occupation, so you don't receive any income during that period, but the expenses you still have to pay for the maintenance, you still have to pay for the caretaker. All right, so all these expenses are still deductible. Right, you can claim those expenses even though you do not generate any income, provided that the non-occupation is temporary. Expenses for gross income received in advance. All right, where gross income received in advance is assessed in the year of receipt. Expenses in relation to that rental income incurred in later basis period is not deductible as they are not incurred in production income. So kalau expenditure, kalau income received, assessed in the year that you receive. But kalau expenditure is for not for the current year, but it's for the following years, you cannot deduct that. Right? Okay, that's the good thing lah. RB dah take into account lah. So expenses in relation to later basis period is not deductible. Example here, gross rental income from January to December, and then you have advance rental. So all these 34,000 will be taxed in the year of receipt. But expenses here, you have house assessment, quick rent. Quick rent ni pintu lah, alright, cukai pintu. Interest paid to bank, repair maintenance, and then you have management fees, repair maintenance, adjusted income. Tak ada apa-apa pun, dia tak tunjuk. Alright, they don't show you the expenditure which is for the later one lah. All these expenditure are deductible. Yeah, deductible. So we have adjusted income of this. Capital allowance, remember that section 4A income, if you are 4A income entitled to capital allowance. So you claim capital allowance, so you have to compute. So now remember that if you incur expenditure related to the fixed asset, for example, the aircon, the fan, the lighting, all right, what else? The cabinet, all these expenditure are capital expenditure, so you cannot claim as a deductible expense. But you can claim capital allowance on that, provided that the income is assessed under section 4A. Alright, so later we look into industrial building. If the tenant use the building as industrial building allowance be given against the rental income. Alright, so later means that we have this what we call industrial building allowance. We do this when you do your tax too, right? It's kind of capital allowance but given on the building, right? The rate is similar. We have IA and AA, but the rate normally is 10% initial allowance and 3% annual allowance. So if your tenant use the building as industrial building, so your gross income minus capital allowance, and you also have industrial building allowance. So that will further reduce your statutory income. Alright, rental loss. Alright, in the event that you have losses, if it's an investment income, it's a permanent loss. But if it's a business income, if only for business source, the losses utilized against other income in the same year. So you can use it against other income. So against your aggregate income. Or can be carried forward to future years to be set off against future business income. Rental loss for investment is a permanent loss, right? For investment. So careful with this. Alright, sometimes it could be a theoretical question. What's the difference between 4A and 4D income? I like to do that. Alright, tax planning in order to minimize rental loss as a permanent loss. A close scrutiny between the matching of rental income and expenses is important. A budgeted rental income for 3 years may be necessary to make sure that you don't have a loss. Yeah. Because kalau you cakap pasal investment income, because it's a permanent loss, we don't want permanent loss lah. Yeah. So we try to adjust accordingly. So notes to computation, deposit, whenever you have deposit, it's not taxable. So for example, here, if you have receipt deposit, right, which is not deposit here, refundable, and you have deposit for electricity 4,000. So for taxcom, your deposit is not taxable, right? You don't bring your deposit into your computation because you don't want to pay tax on the, what is 16,000 and 24,000? 16,000 is your need, and then June and July. So this one is your rental income. Deposit here is not taxable, so you don't claim and you don't have any deposit here. Expenditure only the capital, but any penalty is not deductible. Renovation is not deductible because it's capital. Installation of aircon is not deductible. Again, it's a capital expenditure. So from there, you have total expenditure of 19,000. So you have adjusted income of 21,000. Alright, deposit, all these are not taxable. Assessment is deductible because it's revenue in nature. So assessment ni macam you have to pay to the local authority, right? For example, the DBKL or Majlis Perbandaran Selayang, as the owner, you have to pay some assessment fees to the authority, yeah. Quick rent similarly, but quick rent here, right, they have two quick rent. Let me see, quick rent for 2018 and quick rent for 2019. But here taxcom is for 2019. So if it's for 2019, you can only claim expenditure related to 2019. You can only claim 390, right? Even the total quick rent spend is 780, you can only claim. Alright, it's already 10 o'clock. I already has excluded name. Alright, please look at the distinction between rental income for A and 4D. Right, and that covers the topic on rental income. So please, all right, go back and then go through the textbook, and I'll put in the tutorial question for investment income. And all right, we don't have I will not have class on Wednesday, but you have to listen to the recorded lecture by Dr. Fatima on Wednesday. With that, I thank you for your attention, and inshallah, I'll see you again next time. Means that is after Raya, right? I wish you all the best. I wish you